Hi traders, this is Senior Account Manager Adam Howes hosting the Daily European Open webinar for this Thursday, the 31st of the 8th. Thanks very much for joining us. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex City provides general advice only that does not take into account your personal needs or circumstances. Okay, so we had a relatively stable period of volatility on the market overnight on the major pairs. We focus generally on the AUD USD, the Euro USD and the Pound USD, as well as the US dollar against the Yen as the top four pairs here on this webinar. We also have a look at the Pound against the Yen, crude oil, gold, and the SPASX 200. Some of the major moves in the market happened with gold and the US. Gold prices continue to edge a little bit lower as a supportive round of US economic data bolstered Fed rate hike bets and drove the US dollar a little bit higher. This sort of undermined, gold to some respect. We saw a top in the market recently achieved at the 1325 level after the surprise launch of the North Korean missile over Japan. But since that time, global tensions have eased, and that seems to be a bit of a pattern at the moment in the geopolitical circuit, where you see sort of these events happen, but then obviously the market does recover somewhat. So we saw a very important announcement happen over the course of last night. Now, this is actually in the lead up to the NFP, the non-farm payroll on Friday, for the employment data for the US. Now, for those of you who don't know, non-farm payroll is considered to be one of the most closely watched events in the Forex market. We typically see that as a measure of employment change, or jobs created rather, in the US economy, but it excludes the non-farm and excludes the farm and the non-profit sector. So it's non-farm payroll. There is a preliminary report that actually comes out on that Friday announcement tomorrow at 10:30 p.m. Australian Eastern Standard Time, and that's called the ADP employment change. This is a precursor to the announcement. This happened last night at 22:15. From what we saw from the ADP employment change linked to the NFP, is that 185,000 jobs forecasted. There was actually a result of 237. So this is a bit of a taster in terms of what to expect on the actual NFP announcement, which is obviously the main move in the market on Friday, tomorrow at 10:30 p.m. So that change obviously is quite substantial from 185k, and we've got 237k, which is quite a serious jump. So taking that into account, it could be reasonable to expect that if we do get NFP data following, a similar pattern with higher than expected jobs numbers, then obviously, usually we see the US follow a bullish, bit of a bullish pattern. So just bear that in mind, okay? If you're looking to trade NFP, usually it's handy to look at the ADP employment change in the same week to give you a bit of a guide as to what to expect. And coming up to future announcements as well, if we look down to future economic announcements coming up, we've got the German unemployment rate coming in at 17.55. This is all in Australian Eastern Standard Time. Got a host of economic announcements coming up for the US, including personal consumption expenditure core, as well as gross domestic product for the Canadian dollar, forecasted at 0.1%. We've also got real personal spending, okay, as well. And these are all sort of major economic announcements that the market looks towards. So as I said, the main one that the market will be sort of generally focusing on will obviously be the non-farm payroll. And when it comes to, one announcement, okay, such as that employment data, the market really sort of, pauses and holds its breath waiting for that announcement to occur. That'll be obviously tomorrow at 10:30. So bear that in mind, okay, if you're wanting sort of particular help on how to trade that announcement, okay, with respect to that ADP data that we just discussed, then please get in contact with your respective account manager and they'll be more than happy to help you out. Other interesting moves we saw on the market, we saw crude oil prices continue to drift lower amid worries about refinery disruptions courtesy of the tropical storm Harvey. Data shows inventory shed 5.39 million barrels last week, and smashing forecasts calling for a 1.9 million outflow, providing only a brief relief. So monthly supply statistics are a tap ahead, but Harvey-related news flow may continue to take top billing. So what we're seeing right now is, a limited supply, but equally, like demand is actually forecasted to go up. So it may actually represent in time a good buying opportunity on oil for a bit of a resurgence to the upside. Let's just have a look specifically at the NFP for tomorrow. If we go up to high impact announcements up the top here, and we'll just have a quick look. There we go. Okay, so at 22:30 tomorrow, this is Australian Eastern Standard Time, we have the unemployment rate at 4.3%, and change in non-farm payrolls forecast to 180K, but the ADP figure came in at 237, so it is reasonable to expect that the actual figure would be more than forecasted based upon that preliminary report. Historically, if you get better than expected numbers, then obviously you get, optimism in the market and continuing bullish pressure for that currency or the currency to go up. The last result of 209K actually exceeded forecasts of around about 180K again. So if this were to happen, that would be twice in a row or twice in 2 months that the actual result for NFP was higher than expected. So just looking ahead to specific targets today on the daily technical levels, and we'll just sort of scroll this over a little bit so we can maximize the chart here. So on the Australian US dollar, we've got the daily charts. Okay, if you're wondering what candles these are, these are all daily candles pertaining to these particular pairs and commodities. On the Aussie dollar US dollar today, we have the emergence obviously of a daily open of a bearish candle, and the preference actually intraday is for further targets on the downside at 78.90 and 78.70 in extension. For the SPI 200 ASX, we had the emergence of an open bearish candle today. There was a rebound expected from Trading Central's preference to levels of 5706. It has actually done that. Further levels sought of 5725, so there was a bit of a rebound. But as you can see, the SPI ASX 200 remains very sort of heavily weighted within a consolidated phase here. The ASX has obviously torn, as a benchmark index of Australia's 200 biggest companies, is really susceptible to overseas news. Okay, so we saw massive bearish pressure ensuing over the North Korean missile crisis earlier in the week. But since that time, we've seen that consolidation sort of really setting in. But generally, optimism on the US markets translates into optimism on the Australian markets as well. On the Euro USD, obviously we saw a pretty convincing top in the market, but kind of that resurgence in the US dollar or confidence in the US dollar has really led to some broad weakness on the euro, hitting a meteoric top at 120.80. So the preference today is downside to levels of 1.1825 and 1.1785 in extension. Similarly, with the Great British Pound against the US dollar, there are refreshed Brexit concerns about how Brexit is to be negotiated under Theresa May's leadership. Today, the intraday preference is under pressure with levels of 1.29 and 1.2875 in extension. Correspondingly, we're seeing the USD JPY testing this trend line here, a 50-period EMA trend line. So naturally, the intraday preference today, by the emergence of that bullish candle, is a rise with long positions preferred, with targets of 110.85 and 111.25 in extension. We have a bullish preference on the pound against the yen, even though the yen had been relatively strong on the safe haven appeal because of the NK situation, but we do have bullish preference preferred to levels of 143 and 143.35 in extension. On gold, we have further continuing pressure happening at the moment. Trading Central preferring targets of 12.96 and 12.92 an extension as a sell. And finally, on oil, we're seeing some continued pressure. Remember that the supply issues that we just talked about, but the demand hasn't been, stifled just yet, and demand continues to increase in some capacity. So we're looking at shorter-term short positions or sell positions before that correction may occur. Levels of 45.35 and levels of 45 expected as a sell. So sort of the main focus will be over the coming, obviously over the coming 24 hours, is to really sort of have a look at the high impact announcements that are expected to occur. So as I said, we discussed the NFP coming up on Friday. Really, we're going to be looking forward to a whole host of economic data coming out in the US. Not just the NFP, but bearing in mind that we've got personal consumption expenditure core. So obviously, this is a measure of the personal consumption element of GDP. Now, obviously, if that's higher than expected, again, expect bullish momentum on the US. Another interesting one, or another pair that does move a lot on GDP and inflation, is the Canadian dollar. So we've got expected Canadian GDP year on year for June at 4.1%, annualised at 3.7%. So anything higher than expected on that may create some bullish momentum for the Canadian against the US and other counterpart currencies as well. And obviously the main focus being on the NFP. So we'll be providing constant updates to all of our traders in the lead up to that tomorrow night at 10:30 p.m. But if you have any questions in the meantime, obviously feel free to get in contact with your account manager, whether it be myself or your respective account manager, and we'll be happy to assist you with any inquiries that you have. For the time being, thank you very much for your attendance, and we look forward to seeing you at tomorrow's webinar. Thank you.